So Peter, great to have you with us today. I understand you've kind of had a long day. You're feeling a little bit under the weather, and your voice has taken a beating, but appreciate you being here nonetheless.
And actually, they had double booked me. I had a gold panel I was supposed to do at the Money Show right now, but since I already did a talk for them, I opted to have your conference instead. Somehow I was booked for two things at the same time. And, by the way, let me just correct your intro a little bit, because I recognize that from years and years ago. But I'm no longer a frequent guest on, those television networks. I used to be at one point, but no more. I mean, I'm rarely on. I mean, I do Fox Business every once in a while. But other than that, I mean, I'm really not on anything. I mean, I haven't been on CNBC in years. I haven't been on Bloomberg in 8, 9 years. I used to do it every week. I mean, maybe if I was going to shill Bitcoin, they'd roll out the red carpet for me. I'd be on CNBC all the time. If I was going to try to hound their audience into buying Bitcoin. But no, I mean, the way I speak to the public now is through my own, social media outlets. I do my own podcast, the Peter Schiff Show. I got my YouTube channel, and that's pretty much my audience. It's online. It's not on the major networks. I mean, I guess they got tired of the things that I had to say. I was kind of a novelty, I guess, when I was warning about the financial crisis, and I was good ratings, so they had me on. But I think they're really trying to, deny a lot of the truths that I'm telling. They want their audience to be in the dark, and I'm, providing a lot of light. So I do that on my own channels. And by the way, I know you've got a largely Canadian audience, and the good news there is finally, it took me, I don't know how many years trying to go through all the hoops that IROC had put in front of me, but I eventually got registered in Canada. And so last year, at the end of last year, we finally started accepting Canadian clients at my asset management company. So we're licensed in all the provinces. And so we can work with any Canadian, which is something I hadn't been able to do for many, many years because of the problems that exist between the US and Canada, where, everybody requires everybody else to be registered. So, but now we're legit up in Canada. So, yeah, anybody who's interested in having an account with us, you can't necessarily get my funds yet. I still haven't been able to get that. We're working on that. But for separately managed accounts, we can set them up. You can fund them with Canadian dollars, and we can even handle the retirement accounts up there, the IRAs or your equivalent of an IRA. So we can do all that. So if you are interested in having me manage some money, global markets, emerging markets, developed markets, we do metals. The resource sector, junior miners, and up to the bigger mining companies. So we have a lot of strategies that I think are going to do extremely well in the environment that we're in, and more importantly, the one that we're headed for.
Okay. Well, I want to start, maybe a good point to start while we wait for maybe some Q&A to come in. Fresh news today. Some of the economic data. So core retail sales came in 5.9% month over month versus 1% expected. So that's a big beat. And producer price index 1.3% month over month versus 0.4%, and compare it to the 0.3% the previous month. So possibly some signs of inflation here. Just yesterday, I believe Esther George from the Kansas City Fed said, she doesn't expect any near-term inflation problem. What are your thoughts on the inflation situation and where that could go and what this data?
Well, it's a disaster. I mean, that's all we've been doing is inflating. Now we're just waiting for the consequence of the inflation. The inflation was the expansion of money supply. I think 40% of the dollars that exist came into existence in the last year, something like that. So that is inflation on an unprecedented scale in the United States. And clearly prices are going to go up. In fact, we had the biggest monthly increase in the PPI that was announced this morning in the history of that survey. I'm not sure how far it goes back, but that's the biggest 1 month gain. I think it was 1.3% gain.
That's right.
Which if you annualize that out, I mean, it's close to 20%, something like that, a year. But if you talk about that big gain in retail sales, and some of that is higher prices, right? Because they don't adjust it for prices. It's not all just buying more stuff. Sometimes it's paying more money for the stuff. But that was a big beat. And, we had 3 months in a row where retail sales went down. So all of a sudden they shot up. But you have to look at why did retail sales go up? They went up because at the end of December, early January, Americans got a Christmas present from Uncle Sam. They all got a stimulus check for $1,200. Now, first, where did Uncle Sam, where did the U.S. government get the $1,200? Well, from the Fed. The Fed printed it so the government checks wouldn't bounce. Otherwise, they would. And so Americans got all this money and they just went out and they spent it. That's what happened. I mean, is it a shocker that the minute you give Americans money, they went out and spent it? I mean, that's what Americans do with money, right? They spend it. And what did they buy? They bought imported goods. So the trade deficit for January is going to set a new all-time record. I mean, this is ridiculous. I mean, you can look at some of these news stories, the anecdotal evidence. Look at the photographs. These container ships are like, they're look at the coast of California. They're for miles and miles. They're like, parked out there waiting to unload their stuff. And in fact, and this is kind of like an irony of it, is that we're importing so much stuff that the containers that are bringing that stuff in are immediately being reloaded on the ships and sent back empty to be filled up with stuff. It's happening so fast that American exporters don't even have enough time to load their stuff on these containers because they're gone before they have a chance, because that's how much demand is. It costs 10 times as much to ship something to the United States as it costs to ship it from the United States.
Oh, wow.
because all we're doing is printing money and buying imported goods. And, the crazy thing about it is we're having this surge in consumer spending at the same time where we're having all these people getting laid off. I mean, we actually have more people unemployed now than at the worst part of the 2009 recession, which we call the Great Recession. The worst recession since the Great Depression. We got more people unemployed now, yet we're spending like drunken sailors here. I mean, we're just like spending all this money. Where are we getting it? And you have a lot of people who are unemployed spending more money now unemployed than they spent when they had jobs. That's because they're getting paid more not to work than they used to earn when they did work. And the big difference there is when they were working, they were actually productive citizens. I mean, they were contributing some goods and services into the economy. Now they contribute nothing, but they're able to take out even more because they got money. I mean, you're supposed to earn the money before you spend it, but now you just get it. And so if we're not producing, but we're spending, how is that possible? Well, we have to rely on what's produced in other countries where people are still working. So when people see these numbers, these retail sale numbers, they say, oh, the U.S. has a strong economy. No, we don't. We have a disaster. We have a weak economy. It's the foreign economies that are producing the stuff that we're buying. That's where the economic strength is. All we have is a printing press. And in fact, it's not even a press. It's all electronic. Yeah. But the bottom is going to drop out of the U.S. dollar. This party is going to come to an end. This is going to be a dollar crisis. There's massive inflation. It's just amazing how few people can actually see what should be staring them in the face.
So on that note, Peter, how long can this continue? Because this is not new. I mean, the U.S. has been a printer for a while. They've been a consumer of other people's goods. Now, obviously, as you're pointing out, this is just sort of accelerating the pace, and you got all this free money that's accelerating that. How long before the other countries just get fed up with that?
I wish I knew. If you'd have talked to me a decade ago, I would have thought that by now, something would have happened. So apparently we can continue to do this a lot longer than I thought, because here we are in 2021 and, we haven't had a day of reckoning, but it's going to come. It is inevitable. And the problem is the longer we delay it, the worse it's going to be. So because we've succeeded in delaying it for as long as we have, we've already guaranteed that it's so much worse than it would have been had we had to reckon with these problems years ago. Because during the extra years, the problems got extra big. So it's delaying it is not a victory, right? It comes with a heavy price tag. And it just means that the consequences are going to be that much greater if you're not prepared. And the rewards will be that much greater if you are.
Okay. A question just came in. I think it's kind of a popular one. Robert's asking, people say that gold and silver are good protection during times of inflation. It's also true that interest rates rise during times of inflation, and rising interest rates are typically bad for gold and silver, hence a total contradiction. So he's asking you, Peter, is inflation good for gold and silver or not?
Well, inflation itself is very good for gold and silver. But right now, the expectation of higher inflation is actually proving to be a headwind for gold and silver, because the markets still expect the Fed to respond to an increase in inflation by raising rates, because they do believe that higher rates would be bad for gold and silver. And that's not the case. It depends on the rate you're talking about. If you're talking about short-term rates that are raised to the point where you have a very high positive interest rate, where the interest rate is well above the rate of inflation, that could create a negative environment for gold, although that would crash the U.S. economy, which might create a good environment for gold. So it's hard to say. But historically, if you have an aggressive Fed that is aggressive in fighting inflation and really inverts the yield curve, and you have a high short-term rate, and then you have longer-term rates that are lower because the markets expect the Fed to win the battle against inflation, that would be an environment that would be hostile towards gold. But if you're talking about a situation where the Fed is reluctant to raise short-term rates, and it's long-term rates that are going up, and the yield curve is steepening as investors are dumping longer-dated bonds because they're worried about inflation, and in fact, short-term interest rates continue to be below the rate of inflation, which is the case today. In fact, even the 30-year yield and the 10-year yields in U.S. Treasuries are below the rate of inflation. The entire yield curve is negative. And that is a beautiful environment for gold and silver, because there is no opportunity cost to hold gold because your interest rate is negative. So you're actually getting paid to hold gold instead of holding treasuries. So the whole idea that the Fed is somehow going to be raising rates and that's bad for gold is nonsense. If they're going to raise rates at all, it's going to be trying to catch up to a curve that they're way behind, but they're never going to get ahead of the curve. Even if they raise rates, they're still going to be negative. And what really affects the price of gold is not nominal rates, but real rates. So even if rates are 10%, but inflation is 20%, I mean, that's not going to stop gold, because a 10% interest rate isn't even keeping us even with a 20% rate of inflation. You see, the problem that we have now is we have so much debt that the tools that the Fed used to use to fight inflation aren't available. Because as far as the Fed is concerned, the cure for inflation is now worse than the disease. So we end up having to die of inflation rather than die of something else. But I think inflation is actually going to be far more pernicious than the Fed believes, because I think what's going to happen is inflation is going to end up becoming hyperinflation. I think the Fed is going to get a lot more inflation than they think is possible. Maybe they think they're just going to get us a little bit pregnant, but that doesn't work, right? We're going to deliver twins, right, when it comes to inflation.
Okay, a few people commenting here. I'm sure you've opined on this already before, but yeah, thoughts on the recent market action with Robinhood and Reddit. I know I did see some stats out recently that the number of Americans trading the market is now up to about 1 in 5 people. I think that's up from 15% pre-pandemic, so an increase of 33%. I'm sure all the money printed by Uncle Sam that's, ending up in people's bank accounts, some of that is certainly migrating into the markets. Any thoughts on this new, the power of retail phenomena and then social media and whatnot, and what that means for markets, even from a stability standpoint?
Yeah, well, clearly, I mean, this is really a bubble, unprecedented in size, and it's kind of found its way into all sorts of areas. And the recent Robinhood, Reddit, Wall Street bets, is all part of that. I mean, I think it's kind of interesting that so many people are actually taking their stimulus money and just depositing it directly into their Robinhood accounts. where they're trading small amounts of stock, because clearly, it's not everybody is getting money, right? It's just, they're just showering money on people. And they're also telling people, hey, you don't have to make your student loan payments. You don't have to pay your rent. So a lot of people have a lot of extra cash that they would normally be using for these expenditures. And so I think, with the ease of the Robinhood apps, it's very easy for people to trade stocks, especially when they think they're trading for free, right? That's part of the beauty. Hey, there's no commissions, so you can just buy and sell all you want. They don't realize that the reason there's no commissions is because the real customers of Robinhood are the hedge funds that are buying the order flow to trade against it. So their customers are actually their product. But, part of the problem in the United States, and one of the reasons that so many Americans really have no professional help, if you're a small investor in America, you're not going to get a professional to help you manage your money, because the U.S. government has made it too expensive for anybody to take you on as a customer, right? There's all these security laws from FINRA, from the SEC. And so the brokerage firms over the years have constantly ratcheted up the minimum size account that they're willing to accept, because to accept the smaller account, it's so expensive because there's so much regulation that you can't make any money off those accounts. I mean, if you're going to charge a fair commission or a fair fee, if you're not going to rip them off, if you're going to charge them something fair, you can't make enough to overcome the regulatory costs of taking on their business. So you have all these people that are completely shut out from any professional help. I mean, that's what happens with government. They're trying to help the little guy, and now the little guy is stranded. He's got no help, and he's, a sitting duck for all sorts of fraudsters on the internet pumping and dumping stocks. And there's no filter to try to, save people from falling victim to these things. So you have all these people on Robinhood that I think are going to end up losing a lot of money. It's unfortunate. There's a lot of people online, who are posing as little guys and who are manipulating these stocks. And, they take a position before they let all their followers know about it. They find these illiquid small stocks, whether it's trying to engender a short squeeze or just find a small stock that doesn't have a big float, take a position, and then start, writing all kinds of positive hype about how this thing is going to go to the moon. And then you start getting people to buy it. And then once it starts to go up, that causes other people to want to buy it, right? They don't want to miss out. It's free money. And the stock starts going up. And then whoever started all the rumors, he already owns the stock. He knows it's a bunch of BS. He sells into the mania. And then you get a lot of small people who are left holding the bag. And this is what's going on, and I think it's unfortunate. Now, there's probably some legitimate people too, on the internet that are not doing that are generally trying to help people and giving out good advice. But the problem is, how do you know the difference, right? I mean, so, but a lot of this is being fueled. And of course, companies like this, they get money from venture capitalists, they lose money, but the Fed, this zero interest rate environment, and a lot of the stocks that people are trading are bubbles. Right. If that's you take the money that the Fed gives you, and then you buy companies that have no earnings, that are at crazy valuations, that only are able to raise money to go public because it's so cheap, that if we had a real market with real interest rates, these companies wouldn't be public.
So you kind of touched on it a bit, Peter, but and some other people have asked a question here sort of along the same lines. A lot of people joke that the market you can distill the market down to Tesla and Bitcoin. And as a matter of fact, Tesla just went out and bought a bunch of Bitcoin.
Yeah.
Any thoughts on that situation?
Yeah. It's a marriage, made in bubbles. And I jokingly said, because I thought one of the reasons that Elon Musk, would speak favorably about cryptos or Bitcoin is, Tesla's a bubble too, and so I've been saying, when you live in a bubble, you don't want to throw pins because, you could inadvertently pop your own. I mean, they're all part of the same phenomenon. I mean, yes, Tesla is an actual business, so there is some value to the company. I just don't think the price of the stock bears any relation to that actual value. I think that that's what makes Tesla a bubble, is that people are paying a price for Tesla that is so out of whack with anything that it can possibly be worth. Now, initially, you had a bunch of people who recognized this and who shorted the stock, but they gave up. I mean, they lost too much money because the bubble got bigger and bigger and bigger. So I'm not even sure how many shorts are left at this point. They've given up, and it's just a big speculative mania. But the more the price goes up, the more people are convinced that that they're right, and that the people who were shorting it at lower prices based on valuation, well, they were wrong. No, they were right. The stock was overvalued. They were just wrong in their estimate of how much more overvalued it would get before it ultimately crashes, which it's going to do. There's no question that eventually the price is going to collapse. We just don't know from what point it's going to collapse and how much bigger. But Bitcoin is an even bigger bubble because Bitcoin has no value, right? Tesla has some value. Bitcoin has none. Yet the price keeps going up. And that might mean it's an even better bubble because there's no fundamental analysis that you can ever apply to Bitcoin. I mean, they try to claim that, well, the market cap of gold is X. And so the market cap of Bitcoin should be some fraction of X or maybe X itself, even though Bitcoin and gold have absolutely nothing in common. You know, gold is a metal. It's a commodity. It has a real use in the world, and it has an actual value. Apart from the fact that it's has been used as money and is a good store of value because the value of gold is easy to store, unlike the value of other commodities that are very difficult to store, either because they perish over time, they decay, they rot, or they're kind of expensive to store, or they're not as uniform as gold. So gold has historically been a great store of value, and it's actually been used as a medium of exchange. It's been money. You know, Bitcoin has never been money. It can't be money. It doesn't even work as a currency, but it can't be a store of value because there's no value that you're storing. It's not an asset the way a stocks would be an asset or a real estate or a bond because it doesn't throw off any income, nor does it ever have the potential of throwing off income. Doesn't pay dividends, doesn't pay rent, doesn't pay interest. It's not a commodity because it can't be used for anything. It's not a currency because it's not a medium of exchange. It's not a US account. It's just a digital token that people use to gamble on. And right now, people want to hoard those tokens, and other people want to buy them because they're convinced the price is going to keep going up. And as the price goes up, more people get enticed into the pyramid because they think that they're going to make money too. And then people begin to believe that the price can never go down because they start to think, well, everybody's going to want to get in. And yes, as long as people want to get in, the price could keep going up. The problem is when people want to get out, then what? Because you can't do anything with your Bitcoin. There's no real use for the Bitcoin, so there's no natural demand. The only demand comes from speculators. Well, when you run out of speculators, and now the speculators want to actually spend their paper Bitcoin profits, because you can't spend your Bitcoin. If you want to buy something with your Bitcoin, you got to convert it to a currency first, dollars, euros, yen, or something. And so when all these Bitcoin millionaires decide they want to move out of their parents' basement and maybe buy a place of their own, buy a car, do something, well, they got to sell. Well, who's going to buy? And the minute everybody wants out, or even a few people want out and nobody wants in, the bottom drops out. And the whole Bitcoin pyramid can unravel very quickly. In fact, the price is going to crash much quicker than it went up. So if you think Bitcoin goes up fast, wait till you see how quickly it comes down. Unfortunately, most people are going to watch Bitcoin crash while they still own it, right? So all these paper profits are going to disappear, and all that's going to be left is the memories. But there's going to be huge losses. Because remember, the only money people are going to make in Bitcoin is going to be the money that other people lose. And the people who made the money are the ones that get in early and cash out. The people who lose money are the ones who got in later and got left holding the bag because they didn't sell.
And I guess on one note you were mentioning with respect to what Bitcoin can buy, I guess I thought I did hear that Tesla was going to start accepting Bitcoin. So I guess one thing you can buy is you can buy a Tesla with your Bitcoin.
Well, not yet, but that's part of the hype. Yeah, you know, like are there really a lot of people dying to buy Teslas with their Bitcoin? But of course, what Elon Musk would do in most cases is the minute they get the Bitcoin, they have to liquidate it. Because otherwise, they become a Bitcoin speculator. I mean, are they a car company or are they an investment company that gambles on Bitcoin? Because, when you're selling a car, you're supposed to make a profit. But if you accept Bitcoin in payment for that car, you may not make a profit. It depends on what happens to the Bitcoin. And how do you even have guidance if you're a corporation and you want to invest in Tesla and you're trying to figure out what kind of profit they're going to have? How do you know they're not going to blow the whole thing on Bitcoin? I mean, in fact, if you look at the price of Tesla since they announced that they bought Bitcoin, it's down about 7%, even though the stock market has gone up and the price of Bitcoin has gone up, right? Bitcoin is up 30% since they told the world they put 1.5 billion and Tesla's down 7%. Maybe Tesla shareholders don't like a car company gambling on cryptocurrencies. So maybe that's, maybe that will pop the Tesla bubble. I don't know. Maybe, participating in one bubble will end up being the pin to pop that bubble. I don't know. But eventually the air is coming out of all these bubbles. But I think it's funny that now they've joined. And now Tesla and Bitcoin are kind of in on the same bubble.
Yeah. Peter, a follow-up question came in kind of on the topic you and I already discussed with respect to the stim checks in the States. Just a comment that, do you not think that the people that received a stim check really needed it considering the rate of unemployment? And I guess the follow-up would be, did the government have any choice given that they essentially forced people out of work through the restrictions they put? Was the government left with any choice but to do something like that? What are your thoughts?
Well, first of all, it was state governments that imposed the restrictions, not the federal government. So the individual states should have sent out those payments, not the federal government. And it was because the federal government was there to offer assistance. That's what created the moral hazard. You see, you had all these governors that knew that if we pass a law that forces our businesses to close, the federal government is going to supply all the workers with the money that they're no longer earning. If Donald Trump had made it clear from the beginning, look, any state can do whatever it wants. Each state can decide what type of mandated closures they want, but each state has to live with the consequences of its own decisions. And if that were the case, I think these governors would have had a whole different approach to what they did. They wouldn't have turned off their economies if they were on the hook for the cost. But because we have this moral hazard, hey, it doesn't matter. And in fact, in a way, the worse you made it, the better your case was for government aid. Because now you have all these states that want additional aid to make up for the tax revenue that they lost by shutting down their own businesses that they really didn't have to shut down. I mean, I think we overreacted to a health crisis and made it a much bigger economic crisis than it had to be. But yeah, we had a choice. We could have done what Sweden did, right? I mean, and I think all the states would have acted more responsibly had they borne the cost of their own decisions. Instead, everybody pushed off the cost on their neighbor. And so we had this moral hazard with all these states doing these shutdowns. But yes, I agree that there are people that need the money. But just because people need the money doesn't mean the government's supposed to provide it. I mean, that's not what government is for. The government is not supposed to take care of the people, right? The government's not supposed to support the people. The people are supposed to support the government. But a lot of people wouldn't have needed the money had we had a viable economy. I mean, when the whole pandemic started, President Trump was invoking memories of World War II. And he said, Americans have to sacrifice to win the war on COVID the way they sacrificed to win World War II. And I pointed out the big difference in the way we were asked to sacrifice to win the World War II and the way we're being sacrificed to win the war on COVID. See, the way Americans sacrificed to win World War II is they had huge tax increases. Taxes went way up in 1942 to fight the war. I mean, huge tax increases, right? A lot of people, I think before 1942, we didn't even have a withholding tax. I mean, nobody had income taxes taken out of their pay. That started in 1942 to fund the Second World War. And most people didn't even pay income taxes. all of a sudden people who paid no income taxes started to pay a lot of income tax to fight the war. So American government said to the American citizens, we have a war and you've got to pay for it, right? And you've got to give us more tax revenue, right? Obviously, World War II wasn't anybody's fault. Nobody wanted World War II. Nobody wanted the Japanese to bomb Pearl Harbor. It happened. Nobody wanted Adolf Hitler and the Nazis to invade all over Europe, but it happened, right? It wasn't anybody's fault, but we were now in a war. But that didn't matter. Americans were asked to pay the bill. A lot of people lost their jobs because of the war. I mean, look, a lot of people, 10 million Americans were put into the army. I mean, so they obviously weren't going to the movies. They weren't going out to dinner, right? So a lot of restaurants, were in trouble. None of them got bailouts. They had to deal with it. They had to suck it up. They had to figure out how to get by. And in fact, not only did the U.S. government increase taxes on every American, then they went out and said, you know what? These tax increases aren't enough. You need to loan us money. We're going to sell you war bonds. So the U.S. government started selling bonds to average Americans, average American families, in addition to paying higher taxes, took their savings and they loaned their savings directly to the U.S. government by buying war bonds to help fight and pay the expense of the war. And this is in 1942, just after the Great Depression. So Americans just lived through the 1930s, right? The economic depression. And at the end of that depression, they still had enough money to pay for World War II, to give the government the money. How did we fight the war on COVID? Let's the government go into debt and give money to the people. Let's send checks to the people. Let's bail out businesses. Let's have the payroll protection program, right? So instead of asking Americans to sacrifice and send more money to the government, we have the government sending money to the people, to the businesses. I mean, if we'd have tried to fight World War II like that, we'd have lost. We'd all be speaking German right now or Japanese or something like that. I mean, but this is a disgrace. This isn't a sacrifice. We're just going deeper into debt. We're printing all this money. We are headed for a much worse economic crisis than the one that we were headed to even before COVID. This just made it so much worse. We're going to destroy our currency.
On the topic, Peter, of the federal government, your thoughts? I know we're only a month into the new Biden administration. Your thoughts on how that's going so far, and would it have mattered whether Donald Trump got reelected or Joe Biden got in? Would it have mattered on the trajectory that things are going today?
Well, the trajectory would have been the same. I mean, Trump stayed on the same trajectory as Obama. And so, but I think the slope or the speed maybe, is going to be faster under Biden. I mean, I think as large as the deficits were under Trump, and they were huge records, Biden's going to break those records. Now, Trump would have broken his own records too, but clearly, the Democrats like big government much more than the Republicans. I mean, the Republicans pretend that they don't like it, but they do. They support it. They vote for increased spending. I mean, spending went way up under Trump. Spending on welfare went up. Spending on warfare went up. So the Republicans play lip service to wanting small government and a free market, but the Democrats don't even do that. I mean, they're honest about the fact that they want more government. They don't like the free market. They want big government. They want all these programs. So we're going to get them. They have the House, they have the Senate, they have the White House. So we're going to get a lot of things that are going to cost a lot of money. And none of that is going to be paid for with higher tax revenue. Even if they raise taxes, which they may eventually get around to doing, that doesn't guarantee that they get more tax revenue. They can raise taxes and end up with less revenue because of the impact that those taxes have on the economy and the way people alter their behavior to try to minimize their tax obligations. But the spending is going to be there. The tax revenue may not, but the spending will. And in fact, whenever the government budgets something, it ends up costing a lot more than they think. Because again, the programs come with a moral hazard that ends up creating a greater need for whatever problem they're trying to solve. And so they always end up spending a lot more money than they think. So the deficits are going to skyrocket. We have a laundry list of socialist programs, and Biden really owes a lot of favors to a lot of people So there's a lot of these liberal programs that he has to support, raising the minimum wage maybe to $15 an hour. That's going to destroy a lot of jobs. That's going to put a lot more people permanently unemployed, so they won't be productive, but they're going to be living off the government, living off of welfare. We're going to have, somebody just came in and distracted me from my train of thought. Hold on a second. Where was I? Yeah, so the laundry list of programs, we're going to have some type of infrastructure spending deal. I mean, we didn't get it under Trump, but even some Republicans support this. This is more money we don't have, more money that's going to be printed. So we're going to get that, some type of Green New Deal. I don't know in what form it's going to take place, but we're going to have something that's going to cost a lot of money. We're going to have to spend that. We've got this $1.9 trillion stimulus that's going to be passed. That's going to cost a lot more than $1.9 trillion. It has all sorts of pork in it and all sorts of other incentives and programs that are going to cost far more than what has been bargained for. Meanwhile, look at the oil price today, above $61 a barrel. I think we're headed back up to $100 a barrel probably before the end of the year. The big problem is when it was at $100 a barrel back in 2011, we were producing a lot ourselves. We had all this shale boom up in the Bakken. That's all gone. That ain't coming back. So the next time oil is $100 a barrel, we're going to be buying it from OPEC. And that's just going to be exacerbating an already out of control trade deficit that is already in record territory with oil at, when oil was at $40, $50. Now it's 60 and moving higher. So this is a real disaster that we're going to see for the Biden administration. The key is, is he gonna serve out the term, or is he going to be replaced by Kamala Harris? That, would probably be even worse. Than Biden.
Okay. How's your voice doing, Peter? We're about 40 minutes. Can you take a few more?
Yeah, I'm okay. Yeah.
Okay. Just let me know if you're starting to get. Thoughts on the silver squeeze?
Yeah. Yeah. Nice try. It's certainly easier to squeeze the shorts in GameStop than the shorts in silver. It's a much, much bigger market, and you're up against a lot, bigger players there. Unfortunately, some people got some bad fills because there was one day we had silver up a couple of bucks. And in fact, we had so many orders at Schiff Gold on Sunday night that the people that ended up buying, paid these high premiums because we had to pay more to get the product because there was such high demand. And, the sellers, they see everybody lining up to buy. They're not idiots. They just raise their prices, right? So that's what's happening. You see a lot of this stuff, like they jumped on the pot stocks, and all of a sudden these guys rush in and these stocks, Tilray was up like 50%, 100% one day, then crashes the next day. That's the problem. These guys on Reddit, they don't know what a limit order is, I guess. They just buy at the market. These guys are getting raped. They don't know what they're doing. That is the problem. So you have to be a little patient. I even mentioned on my podcast, hey, okay, I can see a case for some of these pot stocks, but you can't buy them when they are up 50% on the open. What do you're just asking for trouble. You got to wait for a big dip. You got to look at some trend line or something and then buy. You can't just rush in and be at the mercy of these traders who just see this gift horse opportunity to enrich themselves because they're really playing against amateurs, right? And you're a professional. It's like, go to a poker game and try to beat these pros. If you just play once in a while with your buddies and you think you're going to beat people that do it for a living, they don't do it for a living because they're bad players. They do it. You can only make a living playing poker if you're good at it.
Yeah.
And so this is what happens with, the amateur traders. They come in and the professionals eat their lunch. But look, as soon as I heard about this, the short squeeze, I immediately drew the analogy to silver and gold. I talked about it on my podcast before they even did it. It was like the day after I discussed it. Because, there is a big short position in the metals markets. In particular, if you look at the paper markets, the futures markets, where nobody has the silver. You do have some hedgers out there. There are some mines that actually have silver to deliver and that, may sell it forward to kind of hedge their costs and then they can deliver silver into their contracts. But most people who are short silver, they don't have any silver. They have no expectation of ever delivering silver because they know that the guy that's buying the silver doesn't want it either because he probably doesn't have any place to put it. So you have a lot of people that are gambling on what the price of silver is going to do, and they do it with futures contracts. But I've always thought that one of these days, a number of the longs who have these silver futures are going to decide that they actually want the silver now, that they want to take delivery of the contract. And what they end up doing is they'll pay the balance, because a lot of times when you trade, you don't put up the full value of the contract, right? Each silver contract is 5,000 ounces, and maybe only put up enough to cover 500 ounces. I'm not really sure the margins, but in order to take delivery, you got to pay for all the silver that's going to be delivered. But let's say a bunch of people who have these contracts who normally just roll them over to another month, and there's never any silver being delivered. They either settle in cash, or if they want to stay long, they just roll over to another month, and those contracts expire. But let's say some of these guys, they want the silver, which they're entitled to. Everybody who's long silver in a futures contract, you have a right to demand delivery. It's your silver. And so now the short, because for everybody who's long, somebody is on the other side of that contract short. And everybody who's short silver is obligated to deliver it if they are notified that they need to deliver. And well, what happens if you get the notice that you got to deliver? Well, shit, what are you going to do if you don't have any? Now you got to try to buy it. Well, what happens if there's a shortage of actual silver? All of a sudden, a bunch of people that were trading paper silver need real bars of silver to deliver. Good luck finding them. The price goes through the roof. In fact, what might happen as people start to realize that if they hold on to their contract long enough, they're going to have to take delivery. You're going to have a rush of shorts trying to cover their contract before they get hit with the delivery notice. And then the contract soars because people don't want to get stuck delivering silver they don't have. So that mother of all short squeezes, I think it's coming. It may actually bankrupt the COMEX. I mean, who knows? I mean, the people may want to get their silver, but they may not actually get it, because if the counterparty can't find it to deliver, well, even though you're entitled to it, you may not get it. That's why I tell people, if you really want your silver, buy it now. Take delivery now while it's there. Because these derivatives, you may not actually get any silver. You may just get cash. And you may not want that cash when the price of silver and gold are skyrocketing.
Right. Okay. There was a question. I don't know if you can disclose this or not, Peter, but what are your top 5 gold mining companies that your fund is invested in?
Well, I don't have to disclose it. Just go to the Morningstar website and look up the Euro Pacific Gold Fund, EPGIX or EPGFX, I think are the symbols. And you just pull up our holdings, and there they are. I mean, I think they may be 90 days in arrears. So they're not exactly, but you have a pretty good idea. I think it has all of our holdings, not just the top holdings, or maybe the top 20 or something are there. So you have a pretty good idea of what we have. I mean, I think we have a very good portfolio. I'm not in charge of it. I hired Adrian Day to be my portfolio manager. That's all Adrian does, really, is, manage this portfolio. I do a lot of other things, so I'm distracted. And so he has the time to do it. But he also has a lot more knowledge. I mean, he's done this for 30, 40 years. And so he's a top portfolio manager. He really understands the industry. I mean, much better than I do. I mean, I understand why gold's going to go up and why gold's money, but I've never, dealt with these miners the way he has. I mean, he knows all the projects. He goes down there. He knows the players, their track records, who you can trust, who you can't. I mean, there's a lot of risks in the mining sector, especially when you get into the juniors. I mean, anybody, you can buy the big companies. You can buy the Franco-Nevadas. You can buy the Agnico Eagles, or, Barracks or Newmonts, right? Okay, buy them, But it's when you start buying these smaller companies, that's where you take a lot of risk. I mean, you don't know what the hell they got, but that's where you get the most reward, right? You can make a lot of money. I mean, you're going to make good money, I think, in these senior producers. But if you want to make the stupid money, you got to buy these smaller ones. But the problem is a lot of these smaller ones could go to zero and you lose all your money. So you got to get a guy like Adrian to, skew the odds in your favor. So he can at least eliminate the ones that are most likely to, be the duds and really concentrate on the ones that have the most potential. So, you get the most 10 baggers or more and you don't strike out as often. So I think that's what Adrian is going to do. That's the real value that he adds to my fund. And I think we're going to kill the indexes. I mean, that's for sure. I mean, the indexes are just heavily weighted into the bigger stocks, and the indexes are going to have, more dogs in them than we're going to have. We're going to screen those things out. So I think Adrian adds a lot of value, and I think he's a lot better than other managers. I think he has more experience than them. And, we're willing to wait things out. I mean, I'm not really focused on short-term performance, even though our short-term performance is actually very good. I mean, for the first 5 years we had the gold fund, we actually were the top performing fund over those 5 years and 3 years. I got, Lipper sent me a plaque for being the #1 fund. We've given back some ground this year. So I think we lost a star from 5 stars to 4 stars. But I think that's only because we're laying the foundation to really crush our competitors in this next up move. Because I think we have a lot of positions that really haven't come into their own yet, but which will. And so I think that, we're setting up for an even greater outperformance. So I think people should check it out. Go to the website. You can buy it directly from my website that you can see here, yourpackfunds.com. You can just buy my funds directly. But again, if you're Canadian, right now you can't buy the funds. But we do have accounts. Adrian does offer separately managed accounts that we manage for Canadians. You get a portfolio of gold stocks that's pretty much the same portfolio as the one that's in the fund.
Okay. I want to get your thoughts, Peter, on the Great Reset. You'll own nothing and you'll be happier for it. I'm sure you've heard of that. Your thoughts on that? Could that become a reality in the world? And is the situation we find ourselves in with this, ballooning debt, is that directing us that way?
Yeah, look, when your debt is unpayable, then it won't be paid. I mean, right? We have so much debt, it's impossible to repay it. So the only question is, how is it going to be defaulted? Is it going to be, honestly, where you just don't pay and you go bankrupt and the creditors lose their money, they don't get repaid? Or is it going to be through inflation, where the creditors get paid, but they get money that doesn't buy very much? But, that's it. I mean, that's the only ways out of the debt problem. So one way or another, I do think that a lot of the debt that people have is going to be extinguished. But that doesn't necessarily mean that they're going to be living a better life. I mean, the economy can be very, very difficult in that environment, especially if we have hyperinflation. And sure, you have no more debt, but you really the whole country has been destroyed in that economic environment, and everything you want to buy is going to be very expensive. And so a lot of stuff is just going to be in short supply and not even available to you. So a lot of people who have debt are still living pretty good despite that debt. When that debt gets wiped out by inflation, they're going to notice the big decrease in their current standard of living. Yes, they're not going to have the debt anymore, but their quality of life is going to be substantially reduced, maybe even more so than had they paid off the debt legitimately. So I don't think that a lot of people should be looking forward to it. But I do think that if you understand this, it makes sense to have certain kinds of debt, right? Because if you have debt that you have incurred to purchase a real asset, then inflation wipes out your debt, but you still have your asset. So it's your creditor that suffers the big loss. But a lot of Americans just have debt and no assets. They have credit card debt, right? They have student loans, or they borrowed money to buy depreciating assets, like they have a car loan, right? So having that debt wiped out doesn't really leave them with an asset. So they're not going to be richer because they no longer have debt that they weren't going to pay off anyway. So you have to be more strategic if you want to benefit from inflation on what you do with the money that you borrow. And that will define the position that you're in after the inflation. Of course, even if you own a house, let's say somebody has a house and they had a mortgage and now they have the house and no mortgage, or they just paid it off, because in hyperinflation, they just wrote they just paid it off. They was, well, should I go get a sandwich or pay off my mortgage? I'll pay off my mortgage, right? It's just, some funny money. But now you own a house, but okay, well, how much does it cost to heat it? How much does it cost for the air conditioning? How much is the maintenance? What if something goes wrong? What if you need a new roof? How much is it going to cost to repair it? So, those are big problems that people are going to have, even if they own their house and they no longer have to make the mortgage payment. There may be a lot of other costs of maintaining that house that exceed their ability to afford it. And then the houses fall into disrepair. Or maybe a lot of people that currently live in their own house without a mortgage, they may find that they're taking on boarders. They're renting out rooms because that's the only way they can make ends meet. So, things are going to get difficult, I think, in the United States for a lot of people. But it's an unfortunate consequence of the fact that we've lived beyond our means for as many years as we had. The real scary part to me is what we're going to do in the aftermath, and how capitalism is going to get blamed for a disaster that government created, that the Federal Reserve created, and that the solution that Americans are going to be sold, and unfortunately they're likely to buy, is that we need more government. We need to get rid of what remains of American capitalism and go all in on socialism and have the government do everything and completely control the economy and the means of production. I mean, that is the direction that we are headed in. And it is a very, very dangerous direction. And it's even more dangerous if we arrive at that destination. And I'm, trying to do everything I can to try to educate the public so that they don't fall for that. And I'm also doing everything I can to make sure as many Americans don't go broke, because I think Americans who aren't broke, who have resources, will be in a better position to fight back against this than those who are broke and who maybe are turning to government, for a handout and looking for that government crutch, not even realizing that the reason they need the government crutch is because the government crippled them in the first place.
Yeah. So, I mean, America has always been sort of the bastion, the headquarters of capitalism. So it sounds like you do think, the great reset mindset that you will own nothing and be happier for it essentially implies that the government owns everything and you simply rent. It sounds a lot like communism to me. You think that could become a reality in the United States?
Yeah, I mean, look, we're already, very socialist, and the whole concept of socialism is no longer like a dirty word. I mean, there were a lot of Democrats who were closet socialists. They didn't want to come out and admit it. Now, I mean, everybody is out of the closet. I mean, it's like it's chic to admit that you're a democratic socialist, right? And they put the word democratic in front of socialist as if that makes it better. But they forget, the Nazi Party was a socialist workers' party. The Nazis were socialists, and they were elected. Hitler came to power democratically. The Germans voted for him. So democratic socialism, that's Nazi Germany. That's what they were, democratic socialists. So, not that the socialists in America, want to, put Jews in concentration camps. They don't. I mean, they don't have that, that racist element that the Nazis had. But the point of the reference is the Nazis came to power as democratic socialists. So it's not a good thing to say that, oh, socialism is good as long as people vote for it. Look, if people vote for something bad, that doesn't make it good. It's still bad. It doesn't matter if the people voted for it.
Right. Okay. Maybe time for one more. We're almost at an hour.
All right.
I don't want to push you too long because I know you're feeling under the weather today. I see someone posted a question here. Peter, are you aware, or are many aware of the Canadian debt situation, specifically the province of Ontario in Canada being the highest sub-sovereign debt in the world, and yet their ratings are still high? You rarely hear about this. Any question or any comment on that?
Yeah, look, I don't know the specific level of debt that they have, but I do know that historically, the Canadians, there's been a lot of socialism up there. I mean, that's not new. And government has made a lot of promises to a lot of people. And so there's a lot of debt up there also. The difference, I think, is just a matter of degree. The Canadian dollar is not the world's reserve currency. So Canada doesn't run the enormous trade deficits that the United States runs. I mean, Canada has a surplus with the U.S., like most countries. And Canada, I think, relative to its population, Canada has a lot of natural resources. I mean, I think the Canadian economy is going to be particularly benefited from the boom that I see coming in mining and energy and agriculture. So I think a lot of that is going to help, lessen the severity of these problems. And I do think the Canadian dollar is going to gain quite a bit against the US dollar. So we'll see, how the debt situation plays out up there. I mean, a lot of countries are going to have to reckon with the fact that they have too much debt, and whether that debt gets restructured, with obviously meaning some type of defaults, or if it's just inflated away. I mean, that could happen up there too. But I think that the United States will be particularly hard hit, more so than Canada. But, we don't have a lot of Canadian investments for that reason, other than in the resource sector. Kind of that's where we are in Canada. Although I think, we do have a utility up there in our portfolio. I think we have a bank. But, who knows how, we have some turnover. But, and Canada is very close to the United States. So the Canadian economy is more intertwined with the U.S. economy than a lot of others. But look, a lot of the trade that Canada no longer does with the United States, it will do that trade with other countries. And it will trade more with countries that can actually afford the products that Canada exports. Because Americans can't afford anything. We're buying everything on credit. And the joke on the world is they keep giving us credit, even though we can't even make good on the debts we already have, let alone the new debts that we continue to accumulate. And nobody seems to care, because everybody believes the dollar will always have value and always be the reserve currency. And that's not going to be the case, despite the fact that people believe it. One day they're going to wake up to reality, and it's going to shock them.
Okay. Well, maybe one last quick question, Peter. And
all right, this is the last of the last ones.
Just because it's a real simple answer. Your thoughts? What's going to be the top performing commodity in 2021? What do you think?
Oh, I don't know. There's so many. I mean, look what's happened with lumber already. The agriculture, some of these industrial metals too. I don't uranium. I mean, people now all of a sudden, I don't know if we're going to get the uranium bubble again, but look, everything is going up, and I don't know enough about all the various commodity markets regarding the supply and demand situations to know which one will, deliver the most appreciation. I mean, I hope it's something like silver and gold, finally, because that's, we have a much bigger weighting. I've been buying up a lot of energy stocks. Going into COVID, we were underweight the energy sector, and we took advantage of that big drop to now be overweight energy, and it's coming back very strong. Yeah. But, precious metals are off to a weak start, ironically, because people are so worried about inflation that they think the Fed's going to fight it with higher rates, and they think that that's going to hurt gold and silver. Meanwhile, they're still bidding up the price of all these other commodities that people aren't buying as inflation hedges. They're buying them because they need them. I mean, some people need gold. I mean, jewelers need gold, computer companies. I mean, there's a lot of people that buy gold because they need it. But a lot of other people buy gold because they may need it in the future, or they know somebody else will need it in the future. And so they buy it as a store of value. So there is an investment component for gold demand that isn't necessarily there in nickel or copper, right? Other metals or other commodities. Those other commodities are just being bought by people who need them right now. And so those prices are really moving. But I think when people understand how much they actually need gold, and maybe part of the demand is being distracted by the fact that people think they're buying digital gold when they're buying Bitcoin. And when they realize that all they got is fool's gold, they got nothing, then maybe they'll start buying the real thing once they get burned. So I think there are a lot of things that may have siphoned away some of the demand for gold on the margin. And that's why it's, gold and silver too, because they're going to go in the same direction. But silver has been acting pretty strong too, relative to gold recently. Even though we had that initial spike with the squeeze silver and it pulled back, silver was actually strengthening a bit before that. And now on the pullback, it's gaining some strength. So I think if we really can get a breakout in silver, it's going to lead gold. And so if silver is a big performer in 2021, then gold's going to perform well too. So, the fact that I've got so much riding on these mining stocks, I hope that maybe that the best performer would be silver, but who knows? I mean, because there's a lot of smaller. I mean, look at some of these other metals. I mean, look what happened with what's that metal? Rhodium. I mean, a lot of people don't, who even talk. Look, take a chart. Look at a chart of rhodium and see what happened to that metal. So I mean, all of a sudden, some of these metals that you don't really think about just really take off. So you just don't know. I mean, this is massive inflation. The price of everything is going to go up. But one of the reasons that you buy gold and silver is to hedge all those other commodities, because it's so hard to buy the other commodities, the profit from their going up. So just buy a different commodity that will be somehow correlated to those, because you got to get out of paper, because the paper is going to collapse, and you got to get out of fiat digital currencies. These digital currencies are going to collapse too. I mean, I know they're going up now. As we're speaking, Bitcoin is over $52,000 for Bitcoin. So yeah, everybody is feeling good sitting on a pile of paper profits. But they're not going to feel so good when that pile they've been sitting on disappears. And, they're sitting on nothing but air, and they're going to hurt their ass when they come crashing down.
Okay. Well, Peter, great talking with you. Appreciate you coming on the show, sharing your thoughts, especially with, feeling a little under the weather. I hope you're feeling better soon and, get some rest, and hopefully you're back on the mend.
Yeah. Appreciate having me on. And remember everybody, I mean, I'm doing my podcast all the time at schiffradio.com. If you're not a regular listener, I would encourage you to start listening. If you are a regular listener, I'd encourage you to tell your friends. You can also check them out on my YouTube channel, Schiff Report. Subscribe to that if you're not currently a subscriber. Follow me on Twitter. I recently got into Instagram, so now you can follow me on Instagram. And in fact, I think a week or two ago, I'm in Clubhouse now too. So if you happen to be on Clubhouse, I'm Peter Schiff 1. Somebody had my name already. I went to Clubhouse and some Bitcoin guy took my name. So I had to be Peter Schiff 1. But it's got the black and white photo. I got a little over 1,000 followers. The fake Peter Schiff, I don't even think maybe he has one. So that's how. But I mean, I have a lot more followers. On Twitter, I've got I think 360,000, something like that. On YouTube, I got about 435,000 subscribers. So I got a number of people, but I need more. I mean, I really want to hit 1 million on YouTube. So I got a lot of work to do. But if you start subscribing, tell your friends, and we'll get more subscribers, and I'll get the truth out to more people, which is what's so important, because there's so many people dispensing lies to so many people. There's not that many people like me that are telling the truth. So we got to increase my audience so more people know the truth, because the truth is a very powerful thing. Lies are difficult to defend because you have to keep on lying. But when you've got the truth on your side, it's a lot easier. It's just that, there's that old saying, a lie can go halfway around the world before the truth gets out of bed.
So if the Peter Schiff without the one on Clubhouse says, "Hey, Peter, you can have my account, but you have to buy Bitcoin to pay me off," would you do it?
But how many Bitcoin would I have to buy? I don't need his name.
Yeah, I know.
I can't. A whole Bitcoin is too expensive. Maybe I can go for a Satoshi.
Okay. All right. Well, Peter,
that's 100 millionth of a Bitcoin.
Okay. Well, again, thanks. Appreciate your time, and get well soon. Hope you're
All right, take care
on the mend. Yeah. Okay.
Bye-bye.
Cheers, everybody.